Ladies and gentlemen of the crypto space, we're live on a Monday, January 15th at 11:32 a.m. And are you sitting there watching the clock? Time, the clock, it will drive you nuts. And the most important thing we do is figure out how to process time. Humans have an inescapable requirement, or we cannot escape the fact that we live by the clock on a daily basis, and it's a complicated phenomena that philosophers have contemplated for since the beginning of philosophy. And the most important thing is to try and define it for yourself. And the best thing I can suggest is expectations. History is what everyone looks to. And history doesn't really guide our expectations. And a lot of folks really do that. They look to, like the whole hex narrative. It's the only thing that's gone up 100 bajillion percent. I mean, and that is the last reason to ever allocate capital because of a previous move. Past experience is no guarantee of future experience. And that's the standard disclaimer type stuff. And that is imperative to truly understand and truly process. So that's why I focus so much, excuse me, on today and the parameters and calculations that we can do today and why things would from today be appreciated more in the future, not because of things we've seen in the past. In fact, you can extract a couple of meaningful things from past experience like lendiness and growth of trust and the buzzword adoption, that there's more and more people using something. And that's only a part of the equation, though. Let's pop it over to the main screen and see what's going on. Let me get you guys up. I got our comments. So I could say things like, I'm sure everyone bought at the bottom of last cycle, $140 Ethereum, $80 was the lows, and then you're like pretty comfortable. Because if this was a higher low and you went from $80 and a higher low is 886, you're sitting pretty cozy. That's comforting. Why? What are the odds if all of this activity occurred at 800 and change of it revisiting this low number? It couldn't get lower than this low number. That is quite comforting. That's what you want to find, is things that are comforting, because that is what does the work. Time. And there's nothing like a decade that will make all the difference, because this is years. You're talking about almost half a decade. 2019. So a lot of folks are like, are we in the 2019 phase? There's a good chance. From a moving average standpoint, this is a rounding bottom on a monthly time-weighted average price. It's very consistent with the cyclicality that we've experienced over the last half a decade. Complexity is, half a decade is what? Not much. It's not much time. This is why fortune favors the youth. You're 20 years old, who gives a shit about a half a decade? Even if you're 30 years old, things start to change in your 40s, 50s, and 60s. So different actors have different considerations, dependent primarily on their age, how much time they have, and certainly the size of the portfolio. We've talked about that a lot lately. For me, this is the time period in which I've experienced, and this cannot be the case for a lot of folks. Now, it's an assumption I would love to make. Everyone that listens to me, everyone I communicate with, they've been in this since 2013, 14, 15. I got to 2019, and all of this market activity since then has carried their overall portfolio into very healthy territory with significantly higher lows. But for many, this is the first cycle. And therefore, the uncertainty, that sentiment, really hits hard in the lower stomach. And time is not your friend. When you hear from previous cycles, time is your friend because you see these higher lows and you're able to say, all right, check back 2030. That's hard to say to someone encountering this kind of volatility for the first time. But that's something that I would like to express and assert with a great deal of strength that is very meaningful. 2030 is a very interesting time to consider compared to today, particularly because of this cyclicality we've seen since 2008 and prevailing narratives by very popular and experienced macroeconomists. 4 or 5 year time horizon can make a lot of difference. So, Ethereum looks pretty good. Folks may see the volatility. They maybe bought the Bitcoin ETF at 47,000. It pumped to 49,000, and now it's at 42,000. I myself reallocated some of that Roth, basically a good part of the Roth IRA to Bitcoin. I think it was 46,000 and change. I mean, what is that capital doing in a Roth IRA other than depreciating, being exposed to non-trading equities? I don't trade out of my Roth IRA. So I've had equities that I thought were favorable over the last years. One of them was a shipping equity. Two of them, there were a lot, I had mining stuff, but I have a lot of other mining stuff. So the Roth IRA in this context was overallocated. It was just unnecessary concentration into to not just precious metals, but also other raw materials. I like the battery metals, and that's what the other parts of the equities portfolio are allocated to. So I had reason to allocate to Bitcoin. 46 and change is down probably 10%. Are we surprised? Do I have a 1 week time horizon on the Roth IRA? That thing's been sitting there for 15 years as it is. In any regard, you're not consuming from your Roth IRA. So that thing's sitting for another 30 years. It's a lovely time to allocate. And you could always have that. But that's actually the perfect account from a DCA perspective. Shouldn't have a 401k, and a Roth IRA is after tax. So you have to take that as an income. You have to take the income first, and then you could allocate to the Roth IRA. Post-tax. IRAs are pre-tax. IRAs are another story. I'm not fond of IRAs, but there's a great deal of power that comes with a Roth IRA, and that's a perfect account for this kind of appreciation. Frankly, the only thing that disturbs me greatly about IRAs and Roth IRAs are the allocation limits on a yearly basis. I mean, what the fuck are you going to do with a 7,000 and change IRA deposit limit? That's absolutely crazy. Bitcoin looks good as well. It's further along as compared to Ethereum. In fact, it's a little bit more volatile from a time-weighted average price, which is quite interesting. You can see the shakiness in the moving average as compared to increasing smoothness for Ethereum. Maybe that's just an anecdotal observation, but it's something that I've seen nonetheless. Notice the time-weighted average price is coming out of its bottom a little bit more on Bitcoin. Another maybe anecdotal observation. It's just further along. So as the price action deviates to the upside of the time-weighted average price, it pulls it up further. Great deal of potential for a mean regression. Always a potential for a mean regression. In fact, that's all this was back in March of 2020. Do you see the time-weighted average price? Did the time-weighted average price go down? So from a monthly perspective, on average, if you deviate to the downside, on average, 1 month later, you will be at a mean regression to the upside, back to the time-weighted average price. When the time-weighted average price slope changes to the downside, that's quite meaningful. And that is a decent indicator for potential FX rotations. So this is where folks come in with calculations and automation when to swap out from an FX perspective, managing the cash position. That's not something we talk about too much, but we'll probably end up talking about that more going forward as we build a cash flow positive investment portfolio that produces cash. And what are you storing your cash in? That's the age-old question. What are you storing your cash in? Oh, drive you nuts, drive you nuts. Everyone's running around chasing the gas tokens. Tia is doing crazy numbers. Up at 20 bucks, say Metis 10% on the day. Good to see this kind of activity. People are hot. I mean, do I have to point to anything more historical than the run that Ethereum produced when it first started getting hot? It was a whopping 24,000% in a 2016 in a 2-year period. 24,000% in a 2-year period. All right, so there's all the reason in the world to think these are very interesting chains. Metis being a roll up and L2 roll up on Ethereum. These two being Cosmos blockchains. Very interesting. I am certainly salty. I wasn't as aggressive as I should have been for my TIA drop. Should have been more proactive with obfuscating location, as I might say, being as carefully worded as possible. Obfuscating one's location. Yeah, so in that regard, Atom and Osmo have done very well. Osmo has obviously recaptured a fair amount of depreciation, but this thing was up at 3, 4, 5, 6, 7, $8. Check back 2030. I think Atom and Osmo are going to do very well, and I think the attention that Say and Tia are garnering speak volumes to basically the entire ecosystem. Nobody had any interest in Atom at all back in 2020, at all. Then the IBC came online. Osmo started to pick up, but you couldn't really transfer it to various chains. There was nothing to do when Osmo first launched. That's the exact same thing. That's pretty much the case for Tia and Say. Say doesn't really do anything at this point, but Tia obviously has a little bit of deployment. That's the same thing. And that's where your greatest risk lies. When you can't really do anything and you don't know where things are going to head in the coming years. So for me, Say Tia are very expressive of confluence, suggesting the Cosmos Hub network of networks is heading in a good trajectory. It's not something I really watch the clock on. Albeit I do like watching my bags. You watch your bags. Atom and Osmo being those bags. Quite productive. Around 10% apiece. I don't even know what Osmo's at right about now. But Atom dropped down its inflation rate. So these should be interesting. There's a lot of sentiment circulating in social media with regard to, Atom, and it's not necessarily positive, but it's the core. It's the heartbeat of the Cosmos ecosystem. And it's not the sentiment that's circulating that is negative. I don't really subscribe to it at all. And Osmo certainly has the liquidity. There's a lot of talk about AMMs on Cosmos. Um, and that's the same thing that has happened for years on Ethereum. And what has happened? No disruption of the primary liquidity source. What is in the front remains in front. I think Osmo has some sticking power. Astro is indeed interesting. Let's see how their tokenomics pivot. But then we'll also see how Osmo's tokenomics pivot over the coming years. The stuff takes years. There's almost no volume, no activity, relatively speaking, on the Cosmos chains. It's relatively dormant. And that's what's interesting. Roll that clock 4 years and things start to really set up now, right now, as being relatively early. maybe a cycle behind Solana, and Polkadot's a cycle behind Cosmos. It's taken a long time, but I think a couple of things are coming together for Polkadot. I mean, literally, DOT is doing very well. Meat space would obviously point to the depreciation, but it's not really a lower low. It kind of held support, and it clearly pushed back up. And from a time-weighted average price perspective, this is clearly post reverse split. What was it, 1,000 to 1? But it's a higher low and push back up above the time-weighted average price. 6 months' time, I bet you it's going to stay above the time-weighted average price. And that, my friends, is a resistance flip support. Roll that forward 2 to 4 years, and that looks pretty constructive. Early, but constructive. Keep my watch list on Phantom and Matic, of course. Big plays. Phantom has speed written all over it. All this talk on Cosmos Hub's about speed, and Phantom has speed. Avalanche has very interesting with its subnets. So you got networks of networks all over the place. Optimism has its networks and L2s, so to speak. It is self as an L2, but these subnets, big stuff. Arbitrum has a fair amount of liquidity. So you got to compartmentalize all of this activity. Then you always have to go back to your baseline to tell you what the hell is going on. And you look at total amount of stable coins to really assess. Picking up a little bit of steam. Optimism 609. This is basically nothing. All activity remains on Ethereum. Mainnet $69.2625 billion. Those are big numbers right there, ladies and gentlemen. My two small cap, micro caps, Prisma doing healthy at around the dollar. Volatile as all hell. Are you guys surprised? Concentrator at $1.24. That's nice to see. That is nice to see all that. It's nice to see all that concentration, accumulation, activity above your entry price. It's the same exact thing as if you look at a macro cap chart. You're in at $3, $4, $5, $6, $7, $800, and then you see the peak and then the crash. And all of this buy pressure above your entry price. Then it just validates, all right, sit back, relax, and don't have to watch the clock. The clock is not your friend. Hell of a narrative going for Frax in the month of January. I mean, watching the clock, and all you really need to do is watch the clock for 15 days, and Frax chain, Fraxtal, is coming soon. That's pretty interesting. Potential there is completely unknown, and frankly, it's quite right curve. And right curve doesn't do so well. Left curve does the best. That's why Say and Tia are doing so well. I mean, all the narratives circulating a very left curve. And that's okay. Nothing wrong with left curve. I mean, left curve pump on something that is potentially meaningful is quite interesting. And, you know, the whole modular and roll-ups and parallelization, it's all being meaningful. But that's all coming to every network. That's what every network's working on. I mean, literally, that's what Phantom's working on. That's what Solana's working on. That's what Ethereum and the roll-ups, the L2s, are working on. It's all about efficiency, transaction per second, main chain finalization, excuse me. Time to finalization, minimizing time to finalization. That's big stuff. That's the core of the advancement of this technology. And then you really have to separate left curve from right curve. Who gives a shit about that necessarily? I mean, ultimately, those are means. Time to finalization, transactions per second. These are means to an end. What's the end? To do what? To do transactions, speculating on gas token prices? What the fuck? So what are the ends? What is the purpose? What is the use case? Adoption to do what? File storage, metadata storage, we've talked about that. Those are the core use cases. Credit is what I focus on. So transactions per second and time to finalization encourage larger capital to allocate, makes them more comfortable, and that implies the potential for more exogenous capital inflows and endogenous credit creation. And more credit creation is more fees, and more fees is more cash flow. And I think that that is a very comforting thesis heading into 2030. Tapsy's in the house. Tick tock, y'all. My man, you get it. A lot of folks that have been with me for a long time get it. It's the most important thing to always do is you look at the narratives that are circulating on social media, the stories on social media, the talking points, the hyperbole, the catchphrases, adoption, and question everything. And you have to realize you have to put it into a more robust framework. You need to understand the bigger picture. Adoption to do what is a great question. I think I put that on Twitter like yesterday or the day before. Morning Cab, how will Curve and CVX fit into your XYZ and pay into the future? How do you calculate this decision? So obviously we've been involved with Curve, Convex, the whole federation, all the stuff we did back in 2020 and 21 on the stream, pretty much. Figuring out what the hell was going on Phantom and Avalanche. They were hot. Optimism and Arbitrum weren't even launched yet. And then they launched, and literally the first Alt L1 that Curve was on was Phantom. There was literally nothing. There was nothing on the network, and it was like Curve just said, "All right, I'm going to deploy on Phantom." There was no real cross-chain bridges. I think multi-chain was kind of the first way to get a little bit of capital cross-chain, and now multi-chain is gone. I think Andre posted recently a little bit of an update of what's going on with multi-chain, and it's an absolute legal mess. And anytime you get into legal matters, that shit takes years. So that's very complicated. But now you have relatively uh, comfortable ways to move capital cross-chain, especially with Stargate. And the list goes on and on. But Wormhole, there's a lot that have their own liquidity. Laundry list of cross-chain systems, cross-chain messaging, which facilitates cross-chain flows. And now USDC is pretty much a cross-chain asset unto itself that has a significant footprint of native USDC across the chains, USDT as well. This is a whole different world as compared to 20 and 21. I say 20 and 21 because, man, nobody wanted to touch this shit in 22. And that was the bottom, Q4 2022. So it's imperative for folks to understand, yeah, you're late. I've said that maybe weeks ago at this point in some social media posts. 22 was the bottom. We're in 2024. 23 was pretty much everyone figuring it out that it was a bottom. A lot of folks still afraid of macroeconomics. I haven't talked macro on this show in quite some time. But macro is heading in a confused direction. It's either very up or very down. And I lean towards they're going to defer the deflationary pressure because they want the system to continue. I'm not going to digress too much into macro. I'll keep with your questions and we'll focus on crypto more. Now that the market is actually alive again, we could talk about crypto, excluding macroeconomics for a bit now that things have stabilized. Where's move at? 106. Okay, well at least we're at the bottom underneath. Time weighted average price from monthly perspective, not the 3 month. You see this breakdown on the 3 month, and that is comforting. That means things are finally stabilizing. And obviously that stability is cyclical, depending on pressures and frictions in the system. I'm going to get back to athletic concept in a second. But this is a great line. We've literally been above the time weighted average price on the move indicator for, I don't even know, what is that, 2 years? 2.5 years? 2021? December 2021, where it blew out? Oh shit. October 2021 is where it blew out. We have great macroeconomic indicators at this point that will tell us where things are heading at the end of 24 or sometime in 2025. But at some point, they need to get this down a little bit. They need to allow the system to expand to accommodate the growth in debt because you need nominal nominal growth, nominal GDP expansion, nominal tax receipt expansion, or to finance the damn debt. So they got to get the bond volatility down so it allows the system to expand. That's a very broad stroke in explaining where we are with regard to directionality. And this will be a very interesting decade. Do we see a reversal in the DXY? And that's all consistent with stabilizing the system, allowing it to expand to actually be able to finance the debt construct. It's either that or the system fails. And if the system fails, it doesn't matter anyway because you're all out of a job and it's going to be an absolute disaster. So never bet on the end of the world. So Athletic Concept is talking about XYZ and Curve and CVX. It's not about Curve and CVX. It's not about a particular protocol. And you can't over allocate to a particular protocol. You need to diversify to a degree. I can't tell you guys how many bankruptcies I've had in the equities portfolio over the years because I like speculative stuff. And it's disgusting because I've had such a greater degree of success in crypto markets as compared to the equities markets. I have never owned something in the crypto markets that has failed. I've had extremely volatile. It's not failed. I mean, literally the most volatile thing I owned was Abracadabra, and it didn't fail. It's MIM's in a great position. Abracadabra looks like a great CDB protocol. And you could always do comparisons to the other CDB protocols, but that was the most volatile exposure I had. I've never owned anything that failed in crypto markets, yet in equity markets, it's fucking bankruptcy after bankruptcy. Hostile takeover. My largest loss in equity markets was a damn hostile takeover in Canada. And it was just gross. Absolutely infuriating how the hostile takeover was executed. And this Powinghurst literally doesn't even own the damn company anymore. I think it was consumed by Livent at this point, who owns, I don't know, 50% of the damn the project, and the project is still the damn best project in Western Hemisphere for lithium refining into lithium hydroxide. Oh my God, I'm still salty about that shit. So crypto markets are quite comforting for me, but that really required a decade of experience, decade plus of experience, seeing failure after failure in equities markets and how it works and the bankruptcies. And then I come to the crypto markets and what is a bankruptcy? Where's the solvency? Where's the debt? Where's the infrastructure, the OPEX, the CAPEX? There's none of it. That's why it's such a core tenet to what I talk about. It's it's not the bullshit of the equities markets. The board, all the salaries. It doesn't work the same way. These are the appropriate investments. And I wish, obviously, I came to these realizations earlier, but it is what it is. We all chart our own path and come to these realizations at different times. But at this point, the vast majority of my capital is crypto market centric. It's not equities markets because I think equities are stupid. I'm sure as hell not going to crowd into the big seven. That's ridiculous. I'm not going to do what 401ks do and just crowd into the same shit that everyone else is crowding into. Talk about a concentrated trade. And what are we going to allocate to startups, mid caps? For what, growth? 5, 10x growth over the next decade? Yeah. I'm not getting anywhere fast. But then you have immutability and determinism in the crypto markets. Much more comforting. Comforting. Remarkable that I'm much more comfortable in crypto markets. So much more. So much more. XYZ. How much does it cost? How much is it paying? And how likely is it to continue to pay into the future? That's the calculation. That basically means LP positions are going to get diluted real quick as the cash flow is inversely proportional to the depth of liquidity in the LP. So there goes your Z. So liquidity providing is not part of the XYZ equation. You know, um, oh my God, how am I missing the name of a protocol? I'm just, oh my God, I can't even, it's just literally slipping my mind. What redacted does, oh my God. Anyway, so cash flow assets based on duration, based on credit, surface yield, and the LSDs, surface yield. So all of that gets compounded, and the notion of void rentals and that type of federated liquidity financing. So there's yield there, yield, yield, yield. So you have to find the sustainable yield. So your Z is good. And you want your Z to grow proportionally over time. How likely is it to continue to produce into the future? And that's very much associated with lindiness. The longer it continues to produce into the future, the more likely it is to continue to pay into the future because trust is built over time. And that means the equation X and Y, uh, you can actually cut it to the downside because if you deploy $100,000 and it's producing 15% of the money, that's $15,000 a year in income. And if it's increasingly likely to produce that into the future and the principal is growing and that $100,000 turns into $1 million, turns into $150,000 a year in income, okay, fine. It was only 15%, but your revenue grew 10% over the next 5, 10, 15 years. And that's what makes that equation quite interesting, considering how a lot of cash flow is proportional to your basis, is proportional to your X. Your Y is proportional to X. That's certainly not the case, and the way it works with bonds or necessarily dividends, frankly, dividends from enterprise, are discretionary, which means some asshat on the board says, all right, we have enough cash after our bonuses to give you guys an extra 10 cents this year per share. It's literally discretionary. But the determinism in this space is so comforting. It's so frustrating to think about that bullshit reality of equities where it's a board of people, of old ass wealthy people making a decision that affects your future and your present, X and Y. Determinism and Y being proportional to X is crazy in crypto markets. Anywho, I hope that helps athletic concept. Now the complexity is just as old as time itself. Capital makes capital. More money you have, the more money you can earn. Smaller portfolios need to take more risk, likely from a capital gains perspective, and then you have to define a threshold, and that threshold will be dependent on where you are geographically on the planet. If you're in a country where $10,000 a year changes your life, then the entire equation is different than when you're in a country where $10,000 a year pays for 2 months worth of rent, 3 months worth of rent maybe. Different expectations and goals, and that changes all the considerations from a portfolio size and risk that you have to take perspective. I mean, look, 25% on a $10,000 portfolio is $2,500 a year. On countless places on this planet, that changes someone's life. Period. Bainaruga. The clock is not ticking. No, the clock is ticking. You may be staring at it, and it may feel like it's not ticking, but it's ticking every second of every day. Promise you that. And the clock is ticking with regard to the amount of sovereign debt that needs to be refinanced in 2024. $10.8 trillion plus deficit spending. And that's going to inflate the global currency supply. You know, folks are so confused about the monetary system now. The reason to be angry isn't the inflation of the money supply. This is where everyone gets hung up, especially Bitcoiners. It's not they've printed 40% of the money in the last 2 years. That's not what they did. They didn't do that. This chart is a chart of deleveraging of the global financial system. They already printed the money. It's been in circulation. And that's why you have to understand how the dollar works, and that you don't use dollars, you use dollar liabilities, and how the euro-dollar system works. This is just the great deleveraging. 2008 was a remarkable deleveraging. Jesus. And then 2020 was a big deleveraging. So now the system gets to inflate again. It's not, and this isn't the inflation. This is deleveraging. The money was already printed a decade ago. And now the system has gotten to the point where it's on the threshold of deflation, so they needed to deleverage it. That is my interpretation of this chart. And now that they've deleveraged it a fair bit, it's cooled down, they're going to probably need to deleverage again. So otherwise, how the hell are they going to finance all this shit? That's the construct heading into 2024. Asarco, hey Cap, accumulating and staying concentrated. I think that is quite reasonable. You know, compounding is interesting. Compounding obviously has a longer term perspective than maybe even I have. The perspective that I predominantly have on a weekly basis is income. So you could compound it. A lot of folks would just put it in an auto compound. They're great. Tax advantage there. But in general, breaking your portfolio into something that is equivalent to work is the perspective that I like to have. On a Friday, on a Thursday, when you press the claim button, that's cash. That's like a paycheck. Do you invest all your paycheck? No, you don't. You do different things with your paycheck. And that's something that should help, especially novices that are like, all right, I'm getting yield, I'm getting interest, I'm getting a paycheck denominated in an asset. No, you're getting paid dollars, and if it's in an asset, it's auto reinvested. So maybe it's not the best thing to auto reinvest everything. You don't do that with your paycheck on a Friday from work. It's an interesting perspective to consider. Hope that helps. Tim, hello. Brad, good afternoon. George, hey, hey, hey. How you been? Hope everything's good, dude. What are your top 3 coins? To do what? You see, this is why you have to question what is so often not questioned. Top 3 coins to do what? My favorite, because I like the way they're built. I like the technology. Greatest technology isn't necessarily the best investment. Fun fact. So top 3 coins to do what? Top 3 coins for appreciation? Appreciation to be sold for capital gains? Top 3 coins for cash flow, XYZ. How much does it cost? How much is it paying? How likely is it to continue paying into the future? Top 3 coins for what? Isn't that an interesting question? So if you don't see that there's so much more depth to that question, that's the first thing to work on. To do what? You have to answer these questions. They're not rhetorical. Top 3 coins. I literally, if you're talking about technology, I'm very fond of Rolex. I think Bitcoin EVMs are interesting now. What kind of attention do they have? Not much. Frankly, Stacks has a lot of the Bitcoin L2 attention, and I don't see that as very significant into the future. It's gotten a lot of attention from a price action standpoint. Stacks clearly ripped to the upside upon launch. Looks like a damn TIA chart. Going to the monthly. So that's a hell of a higher low. But you're late. This thing's up 900%. Stacks and Alex. That's it. There's literally nothing else on the Stacks ecosystem that's even close to technologically functional in a productive enterprise standpoint. And this thing's up even more. 1100% was its high. But I'm fond, top three coins, I'm very fond technologically of EVMs that operate being secured by Bitcoin hash rate. Why? Doesn't that make sense? Everyone is contentious about proof of stake versus proof of work. And all right, let's secure our businesses using Bitcoin hash rate because that's what the EVM is on Bitcoin, and our businesses are EVM businesses. We have no critical alignment with Ethereum. We have critical alignment with the EVM. EVMs on Avalanche, the EVMs on Phantom, the EVMs going to be more and more on Cosmos hubs. EVMs not on Solana, but I'm pretty sure it probably will be to a greater extent into the future. EVMs clearly on the Ethereum rollups, the L2s. EVM. We have not invested in Ethereum, ladies and gentlemen, over the last years. Our businesses that we own are EVM businesses, and there are EVMs on Bitcoin. There's Rolux, there's Rootstock, there's the new Satoshi VM. There's EVMs there. They're not hot. There's no opportunity really on Rootstock, and Syscoin hasn't had much attention, even with its optimistic Rolux implementation, and that's disappointing. The best technology is often not the best investment. I think Syscoin does look good from a technical standpoint. What does that mean? You only know from hindsight. But it did push above its time-weighted average price. Where it will head, I have no idea. So that's one of my most interesting coins. This is old tech. Years, 2017. This is one of the few assets from years past, cycles past. Nothing survived in 2019. It's a complete clean sweep of the bullshit in the markets. And there was very few actual things of significance, and this happened to be one of them. You think this is going to pull a 10x like TIA? I have no idea, but it certainly has not. So that makes, Tim, what are the top three coins, a very interesting question and very difficult question to answer. Take into consideration a lot of what another one that's very interesting to me is Iris. Top three coins, certainly not for appreciation. But maybe that's me as the contrarian. I'm not looking at the appreciation because you want to appreciate something before it's appreciated by others. And that's how you are in before others. So the narrative for this asset, it's a Cosmos hub, by the way, is China and the Eastern Hemisphere and what it offers from a business tooling perspective. It's off the radar of everyone. No one talks about it whatsoever. I have absolutely no idea whether it's going to do good, bad, left, right, up, down. No idea. The greatest technology is not always the greatest investment. Hope that helps. It's a very good question, and I obviously have a very not common answer to it, Tim. George, the VE curve income keep up with market increase? Yes, it has. Bad. CRVUSD is quite productive, and VE curves at 10%. I mean, at least from a week over week basis, it was at 10%. That's crazy. Seeing base V curve at 10%, but look at that. That's the cyclicality. And all that matters is that it continues to exist into the future. And then as we look at this, $69 billion. What happens when that's $700 billion? What happens if that's $7 trillion? And that's what I'm interested in. And if you're fortunate enough to have enough size where the current income is meaningful, okay, that's exciting and comforting. But so the revenue there, for instance, 10%. 10% is proportional to the amount of volume through the protocol and the amount of credit extended by CRVUSD. If this goes to $100 billion, $150 billion in total liquidity on Ethereum mainnet and curves 55 cents, you're going to be at what, 15%, 20%? And curve doubles in price. Now your portfolio is that much larger, and then relatively the yield's back at 10%. So it's inversely proportional to the curve price, and it's proportional to the amount of pretty much liquidity in the system. Because if there's more liquidity, there's going to be more activity. For Y to be proportional to X, you're really talking about that's more like LPing. Like LPing curve tokens, I guess, that are incentivized by curve tokens. I don't know. Vote rentals are a little bit harder to quantify because that's really a business product. You got to realize that's B2B. Vote rentals are B2B. B2B, B2C, business to consumer, business to business. I mean, these are very meat space terminologies, but it's critical to understand that. Can you believe that? The vote rentals are capitalizing. You're getting paid on a B2B product. Put this crazy crypto space into terms of meat space, of businesses, and only then will you start to understand what these systems are. And then you realize permissionless credit, that's literally what banks offer. And since you're not talking about registered licensed banks, you're talking about non-banks. You're talking about payday lenders and check cashing and buy now, pay later loans, layaway loans. But what's the scale and scope? This is global scale and scope. What's the requirements to access credit? It's permissionless. That's not the case with buy now, pay later or check cashing. What's the KYC requirement for a lot of these credit systems? It's permissionless. So from a business standpoint, quite remarkable. Hidden hand. KJV. Thank you. No, not hidden hand. Oh my God. You know what? Give me a second. That's driving me nuts. I hate when things get stuck on the tip of your tongue. Oh my God. Uh, Going to find the. I'm literally. It's driving me nuts because you're gonna hear it and you're gonna be like, how did you not remember the name of it? All right, fine. I'm not gonna keep you guys waiting. Oh my God, I was talking about folks about bite ball the other day. Here. Butterfly! Fuck my life. How can't I remember the name Butterfly? Oh my God. So Butterfly is an interesting one because it's like an ETF of sorts, an actively managed portfolio of revenue producing assets or cash flow positive assets. So that's what I was talking about earlier when I was trying to figure out what the hell I was trying to think about, and that's what it was. Damien, sucks to see Curve and CVX left behind from all the recent appreciation, and that is so contrarian. That's XYZ. You're buying cash flow. You're not buying appreciation. That's why I've talked about, and that's why all the dum-dums on social media are like, it's not going up. But that's not the point. You're not buying it to appreciate because that's active income. That's why it's so critical to understand taxation. Active income versus passive income. And that's why it's imperative to understand different types of tax-paying entities. Most of you are thinking from a personal standpoint. There's corporate, there's trust, and there's a variety of other types of entities. Plethora of entities that have very different rules, and passive and active are very meaningful considerations. So XYZ for is not has nothing to do with active. You're not trading. You know, what kind of deductions are you going to do against active income? Especially from a personal standpoint, it's a you tend to take the standard deduction from a personal standpoint, and you're not itemizing. And if you're itemizing, I don't know, it's a lot of deductions to get up to the standard deduction. In my life, I've never been able to itemize my personal income returns. The standard deduction was always much greater than anything I could ever itemize. So, hope that helps. Um, DeFi futures high cap, Ethereum holding very strong, 2500 region. Go back to the technicals. Yeah, it's 2500 region. Listen, folks, this chart looks great. Is it at a premium? Sure. Can it mean regress down to the time weighted average price? Sure. How does it look? It looks pretty cool. It's an asset that I find very comforting to hold as a cash position. It's cash. It's literally just like FX, and you're holding British pounds or holding euros or you're holding whatever the hell you want from a foreign currency standpoint. This is just a foreign currency. Volatile as all hell, and the potential for appreciation and depreciation is there. Over a long enough time frame, the appreciation is probably skewed, much more skewed towards appreciation as compared to long-term depreciation. That doesn't make much sense. So this is a nice cash position in my opinion, and I treat it as cash, and this is not something that I consider an investment. Tapsi had money in an index fund transferred all to my bank account for expenses. I've been under investigation for 2 years now because the bank is doing AML due diligence. AML. Oh my God, the bank. I had capital stuck in a bank account once, and it was so infuriating because you're not talking to anyone. And I mean, literally in my case, I had cash stuck in a bank account, and I had a court order. A judge said, bank, you are alleviated of liability. Give this dude his money. The judge signed off on that, and it took them a month for them to give me the capital. So the amount of time it takes for things to occur in meat space is disgusting. There's no efficiency. It's because of people. It's because of humans. Now, we ourselves are humans, so we have to appreciate humans to a degree. And I would say the role of the human is changing. The role of society, the role of responsibility and productivity, it's all changing. And that's meaningful. It's important to understand where things are heading. And that's why I appreciate these businesses that are coded into smart contracts so much, because of exactly what Tapsy said. It gets rid of the humans. The role of the human is changing, and with regard to smart contracts, it gets rid of the human. So what it does is it turns it into a much more quantitative process. There's no discretion. There's no subjectivity. There's no opinion in the way these businesses operate. It's just going to operate deterministically. And that's why I focus on businesses and hold to a higher standard the deterministic, the immutable businesses that cannot be changed. Because that alleviates all the ambiguity, all the subjectivity. It's going to operate the same way over and over and over again. And that is comforting. That's immensely comforting. James, can you show us your settings on your TWAP? My default looks different than your setup. I like this TWAP indicator. TWAP trend by Jagged Soft. And I happen to turn off the shapes. What do I turn off? Background. I turn off the background. That's area under the graph or above the graph, both above and under. I just turn off the background. That's all I do. Plot background. I just like this average price, and I consider it a baseline because I clearly have the SMAs up there as well. Every once in a while, the guppies are nice, and look where we are with the guppies. This is just an extension of moving averages through a range. Barely broke down below the monthly guppies. Wasn't much of a breakdown. Certainly wasn't a directionality reversal from a macro time frame. Hope that helps. Cap, you are long on Cosmos as it has IBC. Do you also long on OP as it has, well, not OP, not the token OP. I'm not interested in, there's no cash flow. Sorry. I'm just not interested in it. I don't even have it on my watch list. Is it going to garner attention? Sure. Because people like, oh, the L2s are big. How do I get exposure to the L2? ARB and OP and OP. And I'm like, all right, great. That's a name. It's a word. And you could vote on the governance. What else could you do with it? All right, you could collateralize it. And clearly, their whole fee regime and the incentive programs and the way everything works on the L2s are very interesting. I feel like a vanguard. I'm like, it doesn't fit into my type of, capital management structure, and that's okay. So I have no interest in those assets. Um, Hope that helps. Drew, would you consider lit for your XYZ equation? Yes. It has. So the problem with a requirement for XYZ really is, especially when there's dilution, when the incentives come from dilution, is a federation of recyclers and sterilizers, which is a very complicated and historic topic we've talked about, especially with regard to sustainability. And we've drawn on historical comparisons to sovereign nations and um, oil for dollars, the relationship between the United States and Saudi Arabia. And I'm sure trade deals where certain nations were probably given preferential access to U.S. sovereign debt, U.S. sovereign cash flow, and they were maybe handshake under the table agreements that the bonds would not be sold for a period of time, albeit clearly their savings, sovereign nation savings. U.S. sovereign debt is other nations' bank accounts and savings. Look at Japan and China. And China's been bleeding because they're under deflationary pressure. But Japan has been very prudent in protecting their savings. I wonder why. Maybe it's a relationship. Maybe it's a deal. Maybe it's geopolitical collusion, as we talk about of late with regard to macroeconomics. So that is a critical observation that is pretty much only present for the curve ecosystem. And it started with convex, and it goes on and on and on, and even the OTC deal and the behavior of the people that bought at 40 cents, I'm sure the vast majority of it is not for capital gains purposes. It's because they want to control the emissions rate, the capacity to finance liquidity depth for a protocol maybe that an entrepreneur or a VC or a large actor and a whale wants to finance. There's great power with the capacity to influence the governance of the current protocol to finance liquidity depth. So it's a B2B tool, and there's a laundry list of sterilizers and recyclers at this point, and there's nothing that's comparable to it. So folks can say what they want, and this is me right curving the shit out of everything. There's nothing that's comparable to it. And that means the price doesn't mean anything. What matters is determinism and immutability. It's gonna do the same thing over and over again into the future, and it will see a future market. And in a future market, it will expand and grow as the future market expands and grows. That's my 2 cents. Seasick Viking went into mid-layer instead of stacks. It's an endless list of shit out there. I appreciate exploring all the shit out there. I have an incapacity to get away from the right curve. I'm not interested in this shit. Like, why? It's an incentive token. It's literally used to incentivize shit, to encourage behavior. It's literally in the documentation. Maybe there's governance for it, but whatever. It's not like it's governance. It's the whole emissions engage rigmarole that we're used to with our various protocols. Oh, so Drew mentioned lit. It doesn't have the recyclers and the sterilizer. So I have lit exposure. I have aura exposure. I mean, aura is paying hand over fist, and lit does very well too. It's not as much as I like, but it accumulates. There's a couple bucks sitting around here. It's from Bunny. Nothing to complain about. I mean, literally even balancer. I think my balancer position is doing better than Bunny at this point from a cash flow perspective. But it is what it is, and you got to explore risk with small parts of the portfolio, and that's something I chose. And does it do well? I don't know. Maybe it's one of those protocols that fails in the coming years. I sure as hell hope not, because I think Uniswap is a big deal. I don't think Uniswap is going anywhere anytime soon. And the Bunny narrative is an incentive layer on top Bunny Swap, incentive layer on top Uniswap. So, and the V2, V3, or whatever the hell they're working on, that talked highly about Maverick style capital efficiency. That's interesting. So I have hopes, and I would like to see it grow and achieve what they want it to achieve. But it's not necessarily X, Y, Z, because Z is much less than other Z's, if you see what I'm saying. That's something great that comes along with a federation, which is a moat, which is how many protocols are dependent on curve. It literally convex. Oh my God, without curve? What does it even mean for curve to fail? And how many protocols are dependent? It's just a laundry list of shit that's dependent on curve. So it would take out a good part of the entire ecosystem. And that means there's vested interest in all of those protocols to support it. And not only just buy it deterministically with cash flow, but probably jump in if need be. And that's exactly what happened with when the OTC deals went out. A lot of people jumped in because they realized the systemic importance. So it's kind of like, I find it's kind of like a bailout of the people anyway. Even though it wasn't a centralized, it was a decentralized bailout, voluntary, opt-in by opportunistic actors. Encoder from Portugal, much a pleasure. Bainaruk, great getting a live show. First time, gotta go. Get my girl from training. Enjoy, much a pleasure. Good to have you. Gazika's in the house. How do you extrapolate Z in your system, especially for things such as curve, which changed a bit since the introduction of CRVUSD, which improved X and Z at the same time? Has reflect on Y. Well, did it really improve X too much? It's still at 54 cents. There hasn't been much appreciation since the 40-cent region. I mean, I guess that is 25% appreciation, but this is significantly underperforming as compared to the vast majority of the sector. I think CRVUSD is extraordinary from a systemic credit system, a credit product. It's quite remarkable. I'm very much looking forward to uh, to my understanding, what's being built is an Aave style credit market, and I think that should be exposed on Arbitrum. I think that's going to be very interesting using CRVUSD and the Llama style uh, soft liquidation model. So that's quite interesting. I think that could be very cash flow productive. Um, Z, it's kind of what I just explained with how many people, how many protocols are dependent on it. And that means they all have a vested interest, and they will all jump in to support it because they need it, and their existence depends on it. So that's the way my mind thinks about these things. And entrenchment, establishment. The longer things exist, the more likely they're going to continue to exist. And I sure as hell hope they're paying me in the meantime. Gasika, much a pleasure. DeFi Futurist, does it concern you cap that Ethereum over leveraged with all the wrapped ETH? Unknown. I have no alignment with just Ethereum. It clearly has the best cash properties as compared to Bitcoin, and Bitcoin surely has very questionable cash properties in meat space terminology. That is an endless debate for all of history. But my expectation is that Ethereum has a greater upside than Bitcoin. I expect diminishing returns cycle over cycle for Bitcoin and Ethereum as well. But I expect outperformance from an Ethereum perspective just the same as previous cycles. On the monthly, I mean, everything looks like it's on track for meeting my expectations, and that's all I could ever hope to achieve. Expectations aren't necessarily price specific, but it's looking for me being generally correct. And if I'm generally correct, uh, I cannot be disappointed by price points because that's all that matters. You just want to be proven right and have your stories proven right because then you can tell good stories at the dinner table. Hope that helps. Caps, what's in your opinion on Deep Pin? I do not know anything about it. Laughing my ass off. Bunny Swap made me chuckle. It's called Bunny Swap, right? I think that's what he's building, though. I think that's what the devs are building is like a bunny swap. It's bunny on top of Uniswap. It's kind of like bunny swap, which is pretty interesting. DeFi Futurist, which one do you like more and why? Alex, Velar, Arc, Arcadico, or whatever the hell it's called. Um, I don't like any of them. I'm just not interested in any of them at all. Uh, I'm interested in the system of stacks to see where it goes, but I don't have a way to express my interest in it because I'm interested in contracts secured by Bitcoin hash rate. But stacks doesn't interest me. I don't think because it literally alienates the entire EVM ecosystem. That's crazy. Why? But then again, Solana does that as well. And they said, we're going to rebuild and do everything in a different language. And they did the same thing. And that's going to probably do very well. There's little to no financial activity on Solana. There's almost no financial activity on Cosmos Hubs. There's very little financial activity on L2, Optimism, and Arbitrum. All the financial activity exists on Ethereum mainnet. Why? Because that's where the money is. You only get financial activity where there's actually money, and money is imperative to understand remains dollars, and that means stable coins primarily, because obviously you always have the concept of cash and money and all these terminologies. Kind of got to define these things for yourselves. And the most important thing, money, store of value, and really settlement. Settlement is the most important thing. You're not settling shit with really stable coins without intermediaries. And settlement is the most important characteristic. And what are you settling? You're settling the bill that you have at a checkout of a supermarket so you can walk out of the store without someone trying to arrest you. That's settlement. And if you can't use something for settlement, it's a pain in the ass to use as money. Very simple to understand. And you could debate it till you're gray on the head and bald. But that's the most important thing. Reduce all of this shit to the most important thing. You want to make some money so you could pay the supermarket so you could eat dinner on Friday and stock the fridge. That's what you're trying to do here. Oh, but Bitcoin is the new money. Try and swipe. Yeah, you could use a crypto debit card. Yes, with an intermediary, and you could debit. You could refill your debit with Bitcoin. I know all that shit. But understand that settlement is what you're here for. And I define a Bitcoin as a cash. and Ethereum as a cash. And I'll start to define other things as a cash. But what do you do with cash? Cash is like a foreign currency. You have to play the FX game. So you're looking at the pairs. You're looking at the DXY. You're looking at the Japanese yen. You're looking at what else? You're looking at the euro, yuan, and the list goes on and on. But generally speaking, the DXY gives you a decent expression where the hell the dollar is relative to everything else. So cash is different than money, and all of it is really important in the realm of settlement, which is getting out of a supermarket and actually paying with the denomination that they want. Hope that helps. Last couple of questions. We'll wrap it up for today. Reg, any Aura interests me from a value perspective, but darn, they have to get some momentum before it's worth a buy. Bear in mind, it starts to get momentum, and then maybe folks are late, and there's early versus late, and I have no idea. I have Aura exposure. It's quite productive. It's one of the most productive positions. It doesn't have much of a federation. It's just literally Jones Dow, which is negligible recycling sterilization pressure. So it's certainly, I would like to see more of vested interest come on board that become dependent on Aura and Balancer uh, being used and being uh, dependent on structurally. That hasn't happened, so there's a lack of a federation. That doesn't diminish me being interested in it and even having enough interest to warrant exposure. It sure as hell doesn't have the same vested interest as compared to the Curve Federation. So that's my 2 cents. So how does that all play out with regard to portfolio composition? Position sizing. If you see something that has more momentum, more strength, more entrenchment, more of a federation, it warrants a larger position size than something that doesn't. And that's the way my mind works about it. Follow where the money goes. Yes, period. Uh, TIA is a big deal, but there's no network. It just launched. It doesn't do anything. It's a gas token, by the way. So it's interesting. For me, no interest at this price point. And watch, check back is $1,000. I don't give a fuck. I need a narrative. I need a story. I right curve the shit out of everything. And that's okay. And it's imperative to invalidate things that you want to buy because you can't own all this shit. So you have to look for reasons to invalidate it. Reason for me to invalidate it is I'm late. And if you're buying it now, you're buying it someone's 10x. You're literally giving someone a 10x on their money. So that's okay. And for me, that's enough. 19 and change, that's cool. But it's good to see. So I like it. I would love to see it just keep going up, up, and up. That's great because I have exposure to the Cosmos ecosystem. If something gets hot on Polkadot, I got exposure to the dot ecosystem. Everything supports everything. So if it does great, great. I have indirect exposure to it, and I'm very comfortable with that. Clarify for those not understanding ETH-BTC. That's right. That's a perspective to have. Trying to stock the fridge, we're buying Lambo, sir. No, 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 Tapsy. You are looking for freedom. You're looking for income. We are dividend investors, except we're not getting fucked over by boards of humans. We're actually buying companies that are paying us like better than REITs. They literally had to create rules for a REIT to pay their investors and not screw them over. And these deterministic crypto systems are much more comforting than anything that a piece of paper and a regulator could enforce for a company. If it looks bullish and Bitcoin has seen a top and Ethereum has historically topped with or very near to Bitcoin, it just means Ethereum will go down less on a percentage basis relative to Bitcoin. That's an argument. And these are the FX volatilities that we try and traverse as best possible. I don't consider Bitcoin and Ethereum investments. I consider them cash. DXY is the chart to look at for the moment. It's always the chart. Yes, indeed. Well said. Certainly a nice bit of ARB coming in for Jones. Yeah, it's not comforting. That's the complexity. If it was comforting, I would probably be deploying more capital. For smaller portfolios, they do need to follow the trend to build the portfolio. Of course, it requires knowledge. Now, bear in mind, build the portfolio, this whole trading shit. Historically, we work for our money, and if you drop out of high school, you expect to be poor. If you finish a bachelor's degree, you expect to make a certain amount of money. If you finish a master's degree, you expect to make a certain amount of money. If you get a PhD, you expect to make a certain amount of money. So uh, people come to this space to make money, and I've always found that awkward because it's very new. Historically, we had to work really, really hard and not fuck up our financials by like, all right, we're making $6,000 a month out of college, and we want to move out of our parents' house, so we get a $3,500 a month mortgage, and literally you got 2,500 bucks a month to live on. Yeah, you're fucked. It was not a good idea to move out. Maybe you should have rented with four of your friends a $3,000 a month apartment, and you're paying $600 a month in rent. That changes the equation. So it's imperative to not come to this space to make money. You come to this space to educate yourself in how to professionally manage capital, and that makes all the difference. If you're trying to make money, if you're trying to force a trade, force an opportunity, force an investment, that means you're not comfortable. And if you are comfortable with those kinds of risks, one, you're either rare, because it's a rare mind that does well at trading, or maybe you're a sociopath, which is okay. Just don't be a violent sociopath. Um, just don't look. If the less you look to make money, the more money you'll end up making. That's something I've thought for myself for a long time. Hope that helps. That and it's nice to have a good position being auto compounded, especially if you foresee price appreciation for Aura. Auto compounding dividends, dividend adjusted. I mean, if you look at stuff like TLT on a 3 month, you see it absolutely got decimated. But then if you adjust for dividends, adjust for dividends, everything changes when you adjust for dividends. Okay, so it pretty much looks like a higher low. Actually, it kind of stayed on the guppies. That's pretty interesting, actually. So, looks like a nice bottom right there from a dividend adjusted standpoint. So, cash flow adjusted, this basically means auto compounded, where this was compounded returns. So, all right, that is investing, and that entails you're taking your income from the investment and you're just reinvesting it into the asset and check back over 5, 10 years. And that's how you change your life. And that's rational and prudent investing where time is used to grow. In your 20s, it's a perfect time to do shit like that. Better make sure because you're not going to have a good income stream with the smaller portfolio. So that's where you could auto compound. If you're auto compounding at 50, 60, 70, 80%, and you do that, and somehow that number lasts for like 5 years, that's crazy. That changes everything. I don't know. It's complicated. I try and tell coherent stories, and I try and tell a little bit of my experience that has come from my age. And in the end, I hope it just helps folks. DeFi Futurist, there's a lot of Chinese playing TIA, yeah, whatever it is. Uh, we could justify the price action all we want. It is what it is. Paul, for now, TIA is both a gas and airdrop token, which, yeah, we'll see how diluted these airdrops become and how well it fares once it becomes tired. Yeah, It's tired for me. I have no interest in any of that. I'm not here to play games. I'm not here to chase fads. I'm not here to chase the hot ball of money. I'm not here to do that. Just not. Um, I know, Tapsy. I know. Damien, how is your software dev business going? Notice any slowdowns? My capacity to execute as a software engineer has been rock solid for the last, holy shit, 24, 15 years. I've been, I've had a job for 15 straight years at this point. Software is a dry sponge, and mobile is always and will continue to be hot. Problem is, entry level's done with AI. The only thing that is worthwhile is experience. I'm not going to get into entrepreneurial conversation towards the end of the stream, but you're coming out of school, you better have a portfolio, which means you better start writing some damn apps and put them on the Play Store, or the iOS App Store. You need live, real world experience. You need to deploy, deploy, deploy. And frankly, that's how I started my career back in '09. Deploy, 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 deploy. Build. You need real world experience. And the beauty of software is that you could literally make your own real world experience. With regard to employment, it's chicken and the egg. You need someone to give you the job, to get the experience, to get the job. Not with software, because you could build your own shit and deploy it not being employed. So that's a very interesting thing that could be taught to any software engineer in school. You better be building. It's not necessarily internships. You could literally outperform an internship building your own stuff. And sure, a couple of names on the resume from internship perspective means something, but that's not necessarily the same experience as being as deploying your own real world things that may be increasingly invaluable. Hope that helps. Deep 5 Futurist, that's deep philosophical. Hope that helps. StarkNet. I like StarkNet. That's immutable. Immutable is a big deal. Gaming's a big deal. I'm not saying anything with regard to tokenomics or cash flow or XYZ or whatever. I like the games. I'm I'm 40, but I grew up on games. I grew up on Diablo and um, everything. I grew up in all the games. Grand Theft Auto, Call of Duty. I grew up in arcades. Mortal Kombat. I mean, I remember when Mortal Kombat came out. Oh my God, I'm so old. I remember when that damn, uh, you know, the arcade box came to the local arcade, Peter Pan Games. That was crazy. So much fun. Used to ride my bike over to Peter Pan Games and play it. Anyway, so I'm digressing. Last couple of seconds. So I'm fond of Immutable and Gods Unchained. I mean, Gods Unchained just reminds me of Magic the Gathering, and I love that card game back in the day. Nostalgia for those old cards. Um, so should we look into Eco instead of the token itself? I don't know. I don't have any sense of what to recommend or if there's opportunity. I don't know. Yeah, I remember playing GTA 1 in a game store. I remember when Grand Theft Auto came out. Oh my God, Call of Duty. I am very fond of zombies. I'm just saying, I like playing zombies. Kino der Taten, one of my favorite maps. 36 people made it to the end of the stream. 12 likes. Smack that thumbs up button. I really appreciate all of you for sticking with me. Tell everyone to subscribe because we can do a little bit better together. In the description is a link to Discord for the most rational community in the entire crypto space. I appreciate all of you. I will see you guys later this week. Peace.